Let's bring in a voice of reason here, UBS Managing Director and Senior Portfolio Manager, Jason Katz. Well, it is interesting to see Cisco comes out and says our AI networking equipment business is doing wonderfully. That stock's at the top of the Dow, and yet people are rotating out of AI stocks. What's at work here?
Well, what's at work here is the Fed is flying blind. They desperately want to cut rates. We have evidence, anecdotal and real, that the job market's weakening, but at the same time, they have nothing to corroborate that with. So, in good faith, they can't really do anything, and the market was banking on these rate cuts. We'll get them, but maybe not as soon as we had hoped for. That's what's behind today's trade.
When you look at the jump in both the 10-year yield, the 2-year yield, across the board, most of the curve is moving higher. That's the market saying we don't think there will be a rate cut in December. Do you?
I don't think it's happening in December. I think it should. I think it's a policy mistake if they don't. You said earlier there was a 68% chance, and now we're down to a 50% chance. So at the end of the day, the market really follows interest rates. You think about 2022, why do we get hit? Fed was raising rates. Why have we rallied this year? AI, of course, but the path of direction of rates lower. We're not going to get that as fast as we want, hence the sell-off.
Okay, so the sell-off, we're down 756 points for the Dow. I'm tired of hearing people say, oh, I missed the sell-off, I missed that dip, I could have bought then because the market's too expensive. Make us some money. If people are out to purchase something in the next 51 minutes, because that's when the closing bell happens, what are you telling them to buy?
Well, first of all, $6 trillion of cash on the sidelines, now earning sub 4%. All that money had the fear of missing out and has underperformed this year. Some of that will find its way back into the market. Probably not trying to catch a falling knife in terms of the AI trade, but probably in areas that are playing catch up. Like you look at the healthcare stocks today, they're all up. They're still very cheap.
Healthcare. And what about the financials? Because one thing for sure, they are diving into creative financing for this AI Mack truck that is charging ahead, at least most days, not today, but most days.
I mean, there's so many reasons why financials look compelling. At a 15% discount to the S&P, you're looking at a yield curve that probably steepens, net interest margins that probably improve. All the deregulation that's happening and about to happen will cause a wave of capital market activity, IPO frenzy. That goes to the bottom line of all these investment banks. So I'm not going to call financials the new technology trade, but I definitely think it's one of the more viable sectors and pretty safe from a standpoint of valuation.
Well, keep in mind, JP Morgan and Goldman Sachs, Morgan Stanley, Wells Fargo hit record highs yesterday. So pull back a little bit, not too alarming. Good to see you, Jason.
Yes, Liz, you too.
Jason Katz.